We just bought Macquarie Group. It's slightly down at the time of me recording this, but in this video where we chronicle the journey of a real money ASX stock swing trading portfolio, I'm going to show you why we bought it and why we're confident in our decision. Will it be a winner or a loser? Who knows for sure, but the odds are stacked in our favor and I'll show you why over the next few minutes. If you've been tracking this portfolio over the past few months, you would have already seen plenty of winning trades and plenty of losing trades because this portfolio runs in real time. It's real life with real money and not some simulation. So both profits and losses are going to happen. Okay, so we bought Macquarie on the 31st of July this year. It wasn't because there was some big news story that came out on that day or we had a hot tip from a friend. It was because our trend-following swing trade system that uses a unique buy-sell algorithm gave us a buy signal. Okay, so let's take a look at the charts for the buy signal that we've taken. When we look at the chart here, it doesn't look like there's much going on. A breakout occurred back here in April and it's kind of tracked sideways here for a few months. So why buy it now? Well, for starters, all uptrends don't start as uptrends. They begin as downtrends that bounce, or they begin in sideways trends. Now, trying to buy in a downwards trend can be dangerous, kind of like trying to catch a falling knife. Of course, you may get lucky and nail that perfect timing to catch it, but that downward motion and the weight of the knife is likely to cut you and make you bleed if you're not an absolute expert at it. No one becomes a knife catching expert without getting a few cuts first. So in the case of Macquarie here, we're going with a sideways trend that hopefully turns into an upwards trend. If it doesn't, our buy-sell algorithm indicator, the red line that you see on the chart, is your protection. While we hope and expect the best outcome to occur, no one has a crystal ball, so you've got to also protect against the worst happening to your money. This is where you'd get out if it was to turn down. You'd cut your loss short and you move on. That way, you always know completely where you stand and how much you have to risk. You can see there was a similar trade back here too. Now, after that initial breakout, where you can see the price break through the indicator, the price went sideways for a while. We got a buy signal when our buy-sell algorithm met all the right criteria at the time. As time progressed, it picked up momentum and went on to having a great profit of 53%. If we'd been scared of the market because we were worried about the negative that might happen and sat on the sidelines too long, we may have never bought it. But because we have predetermined trend-following signals with our buy-sell algorithm, we buy. It's unemotional and it's easy to do. Now, where we get more confidence is knowing our edge on Macquarie. What I mean by this is because it's a system with really clear signals, we can measure its statistics to see if our buy-sell algorithm is overall profitable over the long term. So when we delve deeper into Macquarie and we look at its data with 10 years history of our winning trades and losing trades, we can see that overall, Macquarie has a 58.33% win rate. So for every 10 trades, we win almost 6 of them. However, the really important information and what gives us confidence more than anything on the amount of winners versus losers is how much bigger your winners are compared to your losers. It's the size of your wins versus your losses that makes all the difference. The data on Macquarie shows that our average winning trade is 17.33%. So when we win 58% of the time, we average a profit of 17.33%. That's a really good stat to know, isn't it? But what about the losing trades? If they're much bigger than our winners, then that'd be a bad thing, wouldn't it? Do you know the stats of your own trades and how big your winners are compared to your losers in your portfolio? Not many investors do because they don't have measurable criteria of when they buy and sell, placing a lot of trades on gut feel or using subjectivity. But it's a critical stat if you want to make sure of your long-term success. Well, I can tell you that on Macquarie Group, the average loss trade over the past 10 years is only 5.46%. The winners are heaps bigger than the losers, and they happen on just under 6 out of the 10 trades. In fact, the profits are 3.18 times the size of the losses. That's what we mean when we talk about trading with a positive mathematical edge. If you knew the data of your system was positive like that, you'd have to be confident in taking the trade when it comes up as a buy, wouldn't you? So although Macquarie's been going sideways and we're slightly down from when we bought it, we know that it's a numbers game and the odds are stacked in our favor. That's what trading with a positive edge is all about. And if you can repeat that with all your trades over the long term, your portfolio will outperform and you're a happy and confident investor. So if you have an interest in seeing how we do it and would like to take a run through the systemized process with me personally, feel free to call, send an email, or book in a Zoom chat and I'd be happy to take you through it. And of course, if you want to keep up to date with some of the new positions that we've bought or sold and would like to learn all the ins and outs of trading the stock market with a system, then subscribe to the channel and tap the bell to get all the notifications on the latest. As always, this video is for education purposes only and shouldn't be taken as specific advice as to buy, hold, or sell any particular instrument in the market, and that past performance is not a guarantee of future performance. Until next time, when I look forward to showing you around the markets again, I wish you consistent and objective investing. Bye for now.